Welcome to the WTR On the Horizon podcast. I'm your host, Tim Gerdeman, Vice Chair and Co-founder and Chief Marketing Officer of Water Tower Research. In today's podcast episode, I'm being joined by Patrick Horsman, Chief Investment Officer, and Josh Kruger, Chairman of BNB Plus, Nasdaq ticker symbol BNBX. BNB Plus transforms passive BNB into active yield through a purpose-built productivity stack aligned with the Binance ecosystem. Also joining is my WTR equity research colleague, John Roy. Good morning, gentlemen, and thank you for joining today's podcast.
Thanks for having us, Tim. Excited to be here.
Always a pleasure.
So, Patrick, to kick things off, for listeners not necessarily familiar with BNB Plus, can you please provide a quick overview of the company and its corporate strategy?
Sure. So we are a digital asset treasury company. We chose the BNB token, which is the fourth largest token in the world behind Bitcoin, Ethereum, and Tether. It's part of the Binance ecosystem. You may or may not be familiar with Binance, but we believe Binance is the largest and best business in crypto. They're a very large centralized exchange. They do 40% of global trading volume on a daily basis. For comparison, Coinbase does about 6. So this is an ecosystem that's about 7 times larger than Coinbase. The founder, Changpeng Zhao, CZ, is the 24th richest person in the world. And he created the BNB token in 2017, shortly after the launch of Binance, essentially as a way to tokenize Binance equity. Binance has 300 million active users. They traded 34 trillion in 2025. There's 500 tokens available for spot trading and almost 600 tokens available for futures. And our DAT is designed to give you exposure to the Binance ecosystem. This is not available on any stock market in the world. It's not available through secondary private technology transactions. CZ is the sole owner of Binance. And the BNB token has a couple claims on Binance's earnings, which we'll walk through later. And we think this is an exciting investment for multiple reasons. We also have a yield strategy built on top of the token where through several non-directional trades that we'll walk you through, we can generate 9 to 12%, which is our target for investors in BNB in kind, and we compound that over time. And we believe that owning BNBX instead of owning the token directly, you'll end up owning more tokens over time than you would if you just did it on your own.
Great. That was an awesome overview. And with that, I'll turn it over to John Roy to ask a few questions.
Great. Well, you gave us kind of hit the highlights. Maybe we can dig a little deeper and a couple levels down. So why BNB and Binance? And what really makes it better?
So let me compare and contrast just kind of DATs generally. We're all familiar with Michael Saylor and MicroStrategy, who kind of started this phenomenon. Bitcoin's a great asset. It kind of created the entire space, but unfortunately, Bitcoin doesn't have any productivity built in around it. There's no yield. There's no DeFi. People aren't building things on top of Bitcoin. And as a result, the public companies that have Bitcoin treasuries, they just own Bitcoin. They're hoping the token goes up, and they can't really add any additional value. Other ecosystems like BNB, Ethereum, Solana, these are smart contract ecosystems where through incentivization of different protocols and tokens, lending platforms, derivatives exchanges, et cetera, those require capital and those can generate yield in the native token. BNB has several different yield strategies built in. So we wanted to choose an ecosystem that was productive where we could add value. Our personal backgrounds are in running hedge funds, crypto hedge funds, doing liquid trading around tokens, generating yield from stable coins, et cetera. So this ecosystem, aside being part of Binance, which we think is literally the best business in crypto, allows us to add value for our shareholders beyond just giving them 1x long exposure, which you could get from an ETF or owning the token directly.
Right. Now, do you have a deflationary and burn element of the system?
So that's one of the very interesting things, and one of the reasons we chose BNB is because of the tokenomics. Bitcoin, everyone knows, it has a limited supply of 21 million tokens. They keep mining new Bitcoin, but there's a set max amount. Ethereum, Solana, other tokens are all inflationary protocols. BNB is one of the few from the outset that was deflationary. So in 2017, when they did the ICO, they started with 202 million tokens. They've steadily burned those. They're now at 137 million tokens. And recently, over the last 12 months, those quarterly burns have been over $1 billion US. So you've got the fourth largest token ecosystem in the world, around 100 billion total market cap, where they're burning like 1% of this every quarter. we would argue that that's a claim on Binance's earnings because the capital to burn those tokens is coming directly from the profits of the exchange.
So that's one way to think of it. Would that be like a share buyback?
Very, very similar mechanism. And in the crypto world, they call it a burn because they send the tokens to a burn address that's not retrievable. So essentially, they're going into a black hole and it reduces the supply, and the remaining token holders have a larger claim on the total network ownership. So yeah, it's essentially buying back your token or buying back your stock and decreasing share count, so the shareholders have a larger claim on the company.
Now, I know you mentioned a little bit about different yield strategies. Now, there are DAT++ companies that are in some of the other tokens as well. We know of them. What really differentiates you from other DAT and DAT++ type companies?
Sure. I'll touch briefly just on the productivity of BNB. We've been able to identify and design several strategies. And again, we have a background in running crypto hedge funds. We ran a group called Coral Capital for the last 5 years. We sold that business at the end of 24. So we've generated yield in Ethereum and Solana and BNB across multiple different token ecosystems. So we've got a lot of experience. We chose BNB because we're able to design several strategies that were non-directional. And what that means is that we're not adding additional layers of risk for investors through these strategies. If we wanted to take more risk, we could. But our number one goal here is to preserve principal, allow investors to get long exposure to the BNB token in the Binance ecosystem. And if we can generate yield that's non-directional and not adding additional risk, we think we can do that through the 4 strategies that I'll have Josh walk you through momentarily. But importantly, these strategies are not adding additional risk, although they are adding additional returns. So Josh, I'll turn it over to you to walk through the yield strategies.
Yeah. They the majority of their DATs, are just staking. They're not really, I mean, there's somewhat of a yield strategy there, but they're not, there's no necessarily alpha. Staking is kind of like the deflationary or the minimum amount you would do to remain flat on a network token. But you still do make in-kind returns. So there's still some reason to do so. We kind of have our 4 core buckets of strategies that we're going to employ. One of them obviously is staking. On BNB chain, it's about 2% in kind. It's been that way. It fluctuates a little bit here and there, but it's about 2%. And generally speaking, through some means, you can stack that with other types of yield. And so by no means would it be like just stake BNB and leave it, but it's a piece of the underlying yield and important because it's delivery in kind. The biggest piece of the yield, if you do the two-year look back, is what's called launch pool. Binance is over 300 million active users. It's pretty much the most used retail chain, Binance Smart Chain generally. And so when tokens launch, they really want to be on the Binance platform. It is kind of like the premier launch platform, and you just get so much greater syndication and coverage if you launch there. So everybody wants to do that. As a part of that, Binance receives some of the token supply. And what they do with it is essentially credit that to people that own BNB and have it in a certain position. So what that ends up netting is you're getting 10, 20 startups a year that are releasing their tokens in crypto, and that are selected by Binance and then released to their active user base, and they're zero cost basis. But there's been some great projects that come out of that. So it's not like they're the lowest quality. It's actually pretty competitive to get into that. At a 2-year look back, it's like a 9 to 14% if you're sold in the first hour. And so when we hold our BNB, we'll hold it staked, and then also in a form that receives these tokens. And we'll capitalize on that strategy. We're not looking to get long these smaller companies, but we'll sell those tokens and then put them back in BNB. So that'll compound the entire strategy. That's kind of the highest yielding one. We also do some automated market making, or will do some automated market making between BNB and some like-kind asset. And you could do staked BNB, Lido, or listed DAO, or BNB listed DAO, both of which are yield bearing on both sides. And then you're making swap fees between them as people kind of swap. And those swap fees would eclipse impermanent loss, if you're in the crypto ecosystem. But they essentially would generate additional yield in kind of the assets being swapped. And so you're growing your assets that way. That is about 7 to 9% estimated. And then the final strategy is something that kind of we've done a lot in our hedge fund days and had many strategies over the years. Doing is essentially collateralizing your BNB, staked or otherwise, borrowing stable coins against it, and then opportunistically doing delta neutral yield strategies on the stable coins, i.e. dollars. And those pop up here and there. But it is opportunistic, and you'd only do it if you're earning a significant hurdle over cost to borrow. So that allows us to capture, the markets get wild, rates go to 30%. We have a manner and a controlled way to get access to that. So those are the four kind of yield strategies that we do or will do.
Yeah, so you have a variety of levers you could pull. I mean, obviously, there's been a little downdraft in crypto recently. Does that in some way allow you to mitigate the kind of downdraft we've been seeing?
It definitely offsets it. We're targeting 9 to 12% across these strategies, and that'll ebb and flow a little bit based on how many launch pool airdrops we're getting in a given period. But yeah, like you look at strategy, they've got no place to hide. Bitcoin is just getting crushed. They can't generate any yield. They've got some preferreds that they have to basically dilute their investors on to keep paying. We have a positive yield. So it's a different situation.
And some of those strategies the return is indexed to dollars, and therefore when you go to repurchase BNB, you're actually purchasing more BNB. And it kind of adds to the asymmetry of the long-term hold for investors. If you're accumulating a greater number of BNB here, albeit an in-kind return, long term you could see it having greater return just because you have more BNB.
Right.
And just so listeners are clear, these launch pool airdrops, they're tokens of other projects that are listing on the Binance exchange. Binance might take a 2 to 5% listing fee of the total tokens of that project, and they're giving those to the BNB holders for free. So this isn't something we're investing in. We're not paying for it. Based on our proportional ownership of BNB, we get the pro rata allocation of that airdrop, and then we sell those and we turn them back into BNB. This is, we believe, one of the second claims on Binance's earnings. Last year, they airdropped 782 million in tokens to the BNB holders. So between the token burns, which are 4 to 5% annual deflation in the chain, and the 800 million of annual airdrops, it's a significant amount of earnings that are being dividended from what we believe is the best business in crypto, the Binance centralized exchange, to the owners of BNB token.
Yeah, speaking about Binance, it seems like you're rather tied to Binance. Maybe you could give us a little more color on how tied you are. And I've also heard that someday they might be coming back to the US. Be curious to hear your thoughts there.
Yeah, we have a great relationship with CZ and his team. He has a family office called Easy Labs. It's spelled YZI, but they pronounce it Easy Labs. Ella Zhang, who's the head of Easy, she and I are doing a roundtable together in Hong Kong next week. We talk regularly with them. They've been super helpful in helping us onboard with Binance and some other affiliated businesses. We've gotten VIP treatment there. They appreciate us going out and evangelizing for their business and being big supporters of the BNB token and BNB ecosystem. We kind of had some foreshadowing around CZ's comeback in the US, specifically Trump pardoning him. We had some relationships where we knew that was coming. It was part of our thesis to invest here. And we believe the US market is the last market that used to operate here, and they were kind of run out of the US by the Biden administration. But we believe the regulatory framework is in place for them to come back. If you look at their trading fees versus the US incumbents, Coinbase and Kraken, they're 20 to 25% of the cost that Coinbase and Kraken are charging to US users. So it's a dramatically cheaper experience. And we would argue the platform is much better. And then from a liquidity and trading depth standpoint, this is like the 800 pound gorilla of the industry. So if you want to trade and get the best liquidity, which most traders do, you want to be on Binance. So we think them entering the US market, they're going to take a lot of share away from Coinbase and Kraken and other US incumbents, crypto.com, et cetera. And those businesses had been really afraid of Binance. It wasn't until the second half of last year that BNB token was even available to trade on Coinbase. They literally had viewed it as a competitor. They didn't want to support their competitor's token, but it's the fourth largest token in the world. How can Coinbase not offer trading on it? Kraken only listed it in April of 25. So This had been something that was really not easily available to US investors unless you were a sophisticated user who'd go buy BNB somewhere else. And US users currently aren't allowed on Binance. So us providing access to these yield strategies is something that US investors can't easily do on their own. We've had to set up an extensive offshore infrastructure with an offshore trading firm to run this, because Binance allows for the US public company to be the owner of the assets, but it won't allow the US public company to directly direct the investing or trading of those assets. We have to do that through an offshore structure.
Right. Now, you've mentioned more than a couple times that, you guys look at this as from the hedge fund perspective a little bit. That's your background. Maybe you could give us a little more color on your backgrounds and why it is so important to generating these outsized returns in good and bad times.
Sure. I'll quickly run through mine. I've been a hedge fund manager for 24 years. Right out of college, I built a placement business raising capital for other hedge funds. Myself and my partner raised 15 billion for our clients. I spent 15 years of my life running around the world with some of the top hedge fund managers, raising billions of dollars for these guys, meeting the best institutional investors, and it really shaped kind of my thinking around investing and how I approach investing. I became interested in crypto in 15, launched my first crypto hedge fund in 18. We were arbitraging the grayscale publicly traded trusts. We would borrow crypto from different trading desks and then use the crypto to go long the trust. Those trusts were trading at very inflated values in the market. So if the trust had 10 billion of Bitcoin, it was trading for 20 billion on its stock price. And we were able to basically create exposure to the trust at the net asset value, even though it was trading for an inflated value in the market. And then 6 months later, we could sell those shares and realize the spread. So we made a tremendous amount of money for ourselves and our investors in that business. The trade got a little long in the tooth coming into 2020. We exited very profitably and then launched a DeFi fund. DeFi is decentralized finance. Essentially, think about it as building on-chain financial applications on top of blockchain networks. So decentralized trading venues like Uniswap, SushiSwap, PancakeSwap are all, think of them as another Binance or Coinbase, but it's done without a big team of people and infrastructure and done just with software. People have built lending protocols where you can collateralize your crypto and borrow stable coins against it to go buy something in the real world. Derivatives exchanges, Polymarket and Calci, these prediction markets are all built on top of DeFi. So we were kind of at the forefront of financing a lot of these different DeFi applications when they were very nascent. And we had a fund that would provide liquidity and balance sheet capital. So we've been investing in this area for the last 7 years. We've helped build a lot of crypto infrastructure. We've invested in 300 plus blockchain projects. And we're excited about kind of the institutionalization of the space. So that's why we thought the digital asset treasury model made sense to kind of bring crypto exposure that's difficult to get on your own to traditional investors in an easy to own format like BNBX.
Yep. My background is computer science from Texas A&M. When I was there, I did some Ethereum mining in 2016, kind of dabbled with on campus. I was pretty young at the time. And then we got into some like high frequency trading strategies just because the markets were open at that time. So I BitFinex and Poloniex, we ended up arriving at like a high frequency algorithmic lending strategy on those, which is a Bitcoin in-kind strategy. Me and my partner started a hedge fund then. And then it kind of 2016, 2017 cycle happened and kind of things got crazy. I did some distributed compute firmware development after that. And then in 2020, me and JR, our other partner, started a DeFi fund, which, as Patrick said, kind of worked with the beginnings of these strategies, all on-chain finance, a lot of protocols and stuff that are now very large. We're just getting started then. We ran market neutral on that. And then eventually I met Patrick and his team. We folded our fund into theirs, grew it to 100 million plus, and then eventually sold that to DNA in the end of 24. And so for us, the Binance theme, the tailwinds behind that, the best company in crypto, the exclusivity of it, the fact that you can generate yield and have that convexity on your return if and when it does run, mixed with our ability to generate return on the underlying asset reliably, is kind of just putting those pieces together. It kind of made sense to pick this asset, the underlying business, and then we all know each other. We're a solid team, so.
Excellent. Well, maybe one final question for me is why BNBX now? I mean, versus, why not wait a little while? What's happening?
Given what's happening in the crypto markets, this big pullback, which we think is really not a reflection of the quality of the business or the market opportunity in crypto. We think it's really liquidity driven. We think this started 6-7 months ago with the kind of unwinding of the Japanese yen carry trade, which for sophisticated investors was really the global cheapest place to borrow. Japanese interest rates at close to zero for the last 10-15 years. Sophisticated investors could go get loans in yen, convert them into dollars or whatever asset they needed, and buy risk assets. There was a fair amount of capital in crypto and AI and other things that was financed by this. And with now the decrease in the yen and the increase in Japanese interest rates has really caused a lot of those loans to be called and investors to have to delever. And unfortunately, crypto has been one of the areas where people have been pulling capital from. More recently, with the kind of potential Fed nomination that's been talked about, I think that's pretty hawkish. The markets haven't liked that, and just the general uncertainty in the economy and markets right now, investors are nervous. Crypto has an embedded situation with a lot of leverage, and unfortunately, when you get these small pullbacks, sometimes they turn into large pullbacks because there's cascading liquidations due to deleveraging. So we think it's a pretty interesting buying opportunity right now. If we had fresh capital, we would be buying more BNB. So for investors that are sitting on the sidelines, you want to buy when there's blood in the streets, and the streets are starting to bleed. So it's a good entry point.
Well, that's a good spot. So, Tim, over to you. Thanks so much, gentlemen.
Well, Patrick, Josh, and John, thanks for joining me today to have a most interesting discussion on BNB Plus. Quite an interesting business model, and thanks for your time.
Thank you.
Thank you for listening, and do not forget to subscribe, as well as visiting www.watertowerresearch.com to stay up to speed on the WTR on the Horizon written research reports, podcasts, fireside chats, industry-specific symposiums, and conference schedules. We will see you next time for another edition of WTR on the Horizon podcast. Finally, a special thanks to the producer and editor of the podcast, Krista Fitzpatrick.